What's going on, everyone? As we can see, the S&P 500 sank down again on Friday, closing down 1.64% with quite the downwards move. We actually made new all-time highs last week, but then, of course, came crashing down Thursday and Friday with two back-to-back pretty rough moves. We're going to look at what caused this move on Friday, and we're also going to go and explore a lot of the seasonality data, looking at August. Of course, August isn't really the best month of the year, so that's going to be a pretty interesting topic to look at. And of course, the SPY is in a pretty interesting spot right now, falling below its 20-day moving average for the first time in over 60 days. So we're going to explore these things. Stick with us, make sure you're subscribed, and let's go. A lot of traders are looking at the last two trading days, Thursday and Friday, and are kind of scratching their heads here. Like, why is the market doing this after posting new all-time highs here and after an amazing rally following some of the good tech earnings? Well, we are starting to see the economy weaken a little bit. A lot of people are actually pointing to the jobs data that ended up coming out last week on Friday. The U.S. added just 73,000 jobs in July, which is pretty good, but it was under the Dow Jones estimate for 100,000. I do think that there is some concern here. Now, a lot of people do question the validity of this data. You know, obviously they revise these numbers, and a lot of times they end up getting revised up or down quite a bit. Trump has even had a lot of comments about these recently. But whenever I'm looking at the jobs data, it's just one thing that shows that the economy could be weakening a little bit. Now, we could start to see, let's say, inflationary pressures because of tariffs, things like that start to come into play as well from the tariff situation last week. I know that was a pretty big deal, but let's go ahead and look at what normally happens around this time of the year. We know that August is not the best month of the year, and looking at it since 1950 even, and over the past 10 years, and also in a post-election year, we do see some pretty crazy data. Right now, August, of course, you know, since 1950 and over the past 20 years, it's kind of flat here, but look at that blue bar for the post-election year specifically, which is the year that we're in now. August is generally pretty red here, at least since 1950, so that is going to be a pretty big thing to keep in the back of your mind. Now, I know August is a time of the month that, you know, we always look for volatility. The volatility index generally shoots up around this time of the year, and we can see it updated right here over the past week, and it did start to shoot up. Now, it is lagging behind the average on the data here, but nonetheless, it is starting to uptrend a little bit. If we start to see it really pick up and get towards like 30, 40, even like, you know, above 40 here, that could get pretty nuts, and I think the market would start to turn over quite a bit. And I know that we've been looking at this a lot lately, but if we go to the SPY and we just go back to last August, there was actually a pretty big dip in the market during this overall uptrend, and I don't think that it's necessarily terrible to see here. You know, we can see in the red box, August was pretty red, but once we started to get the recovery going and actually broke out above that recent high, the market had a great continuation following in 2024 into the end of the year. Now, that could happen this year. You know, we could have a great continuation come into play, and that's still something to look at. So don't necessarily get too worried or too scared by a natural pullback that could end up happening in the market. You know, whenever we look at the SPY over the past few weeks, we have seen a big shift to the upside, and now over the past two trading days, a massive shift down. It's a big difference than what we've seen, and if we go back and compare, you know, a lot of these SPY downtrends, a lot of it starts to come off of a couple of first initial pretty red candles, kind of like what we're seeing right now. I'm not saying that this downtrend has to truly continue down, of course, like the beginning of the year, like April, or even like last August, but nonetheless, it's something to look at and to have in the back of your mind just in case this downtrend does start to develop and continue out just a little bit more. And if this does happen, you know, it's not necessarily the worst thing in the world. There can be other opportunities out there. I know that we've been looking at gold and silver a lot this year. Gold exploded Friday, up over 2%. I think that traders are starting to run for safe haven assets. We can see GLD has been dipping recently and is actually in a pretty good position whenever we look at some of these recent lows and supports, especially the one right around $300 even. That's going to be a very big level here, and it keeps holding for GLD. If GLD could end up breaking the upper end of its range, there's some pretty good resistance around like 317, so that would be a good level to really get out above and maybe start to extend towards 320 plus as the next year goes on. But I know there's just a lot of data out there, right? We keep talking about August and looking at August seasonality, and things are pretty red. And, I found some very interesting data where there's just a lot of out-of-the-blue events or black swan events, you could say, that happen in August. Now, you can go back a long way. Iraq invades Kuwait. Obviously, that was 1990. That was a long time ago. And then even most recently, Jerome Powell remained hawkish at Jackson Hole in 2022 and ended up sending SPY down 4.2% during that time. So that was a pretty wild event, obviously, that happened in August of 2022. I remember a lot of people were looking at that Jackson Hole situation, and things got pretty wild around that time. That is for certain. But I'm definitely going to be going into August just with a little bit of, I would say, a chip on my shoulder. And I'm not going to be necessarily as bullish as I was in the middle of July or as we started to really break out with the SPY. But going and looking at SPY just a little bit closer, looking at maybe some individual levels here, something that I'm watching for is this overall trend line. If we go to like an hourly chart and we start to zoom out, we can see that the SPY has touched this trend line here 2 times. Now, most recently, there was an even shorter term trend line that started to give out, and SPY really tanked once we started to break below that trend. But now we're actually testing a broader trend that we can see here. The SPY did hold at the bottom of this broader trend on Friday, right around the $620 mark. So if we see this trend give out and let's say 618.50 starts to break, I think that could be a great level to watch. We can see that 618.50 has been very nice. There's been multiple hits and touches off of the 618.50 area. So if it does break down, be a little wary and maybe start to look to shift to the downside like a lot of people started to do on Thursday and Friday of last week. But this move, or this downwards move, is becoming pretty accelerated, with the SPY closing down like 1.6%, and even the rough move from Thursday, it just shows that sellers and selling is starting to pick up, and it makes sense. The SPY just went on a massive recovery from the lows of April and pretty much recovered up. Right here, we'll just do the move right here, pretty much like 33%. So that is quite the run up there by the SPY. So again, a short-term pullback or something of that nature is not necessarily that surprising or even that unexpected, and we've had a few short-term pullbacks on the way up, and a lot of times they have really ended up being great buy the dip opportunities, which could be something that comes here over the next couple of weeks, so be ready for that. If we do see a good recovery with the SPY, I am watching resistance around 624 to 625. That would be a very crucial level. We even tested that in the middle of the day on Friday, and if we could break that on the SPY back up, maybe shift to the upside in the ultra short term. But then again, I'm definitely going to be watching that lower trend line though the most carefully here. I know that we've looked at a lot of data over the past few weeks, or even just a few times throughout this year, where we've been watching the SPY hold above its 20-day moving average quite well. We can see on the daily chart, on Friday, the SPY actually pulled under the 20-day moving average, so that was a pretty negative thing to see, and of course, this comes with some pretty good data. Looking at this data here, whenever the SPY does pull back under its 20-day moving average for the first time in over 60 days, like the situation that we're being presented with, it has resulted in some pretty negative movement, I would say. This is some pretty negative data. 1 day later, the percent of the time that the market's green is only 22%. Whenever you get out here, it gets even worse almost. Like 2 days later, 33%, that's okay. But for 3 days later being 22%, that is some pretty brutal statistics. For the next 3 trading days, I'm definitely going to be very skeptical about the overall move in the market. And I'm going to be worried that, this overall trend does break down and that we do end up seeing the SPY pull back a bit. But I thought this data was pretty pretty awesome. I wanted to show it to you guys, and we will be exploring this throughout the week as these days progress and as we get closer to, let's say, day 3, day 4. Now, I do got to say, whenever we get like 1 week later, the data does get a lot better. But then again, still not the best average percent rise, still being negative 0.41%, with a couple of these readings being extra bad over the course of like a week or so. And I know last week we showed some August historical data as well that showed whenever you're in the second term of a post-election year, August has been red just about every single time. Obviously, the percent of the times that it was green was 0, so it was red 100% of the time. That is a pretty negative stat, so I just wanted to add on that one really quickly. But we are still in a crazy earnings season as well. Look at this earnings lineup for this week. This week might even be better than last week. Now, I'm not saying it's going to be better as in more impact on the S&P. Last week was the biggest as far as the S&P is concerned, but I see a lot of people's favorite stocks here. Palantir on Monday and after hours. Hims on Monday and after hours. Those two stocks are going to be extremely interesting. Palantir, everybody's been watching them this year. If we go check out their chart, it is pretty much straight to the upside. It has been awesome. Now, we did pull back on Friday, of course, with just about everything pulling back. But whenever I look at Palantir and I just look at the overall run that it's been on, it has been a very historic one. And, there was a couple pullbacks mixed in and things like that at the beginning of 2025 as we went into that April dip, but nonetheless very resilient and continued to make new highs. It's going to have one hell of a report to keep up with the hype, but I do love Hims there as well. As the week goes on, though, it just gets better. I feel like AMD on Tuesday and after hours with SMCI. Those are going to be two pretty big reports. Uber on Wednesday and pre-market with Shopify. Even NVO will be extremely interesting next week with all their weight loss drugs and things of that nature. Disney and after hour or pre-market Wednesday. Before open Thursday, we have Eli Lilly. And after hours, the Trade Desk, QBTS, and the list goes on. Definitely screenshot this if you guys want. If you want to keep it for yourself, but this is a pretty awesome earnings week, and there's a lot of fun stocks, and it's hard to name them all. So let me know in the comments which ones are your favorites, because there are just so many out there. I would say my two favorites are Palantir, and I'm also going to go with QBTS. I think those two are extremely interesting. Hims is a solid third for me as well, but I like the hype with all three of those stocks in the short term. And, Trump did do the tariff update last week. So we did get the August 1st deadline. It came and went, and Trump did end up adjusting tariffs slightly. So they announced that the universal tariff for goods coming to the United States will remain at 10%. That wasn't anything that's too crazy, but the 10% rate will only apply to countries that the U.S. has a trade surplus with. There will also be a 15% rate for countries that we have a trade deficit with, and then even more than a dozen countries have even higher rates than those. Those countries are listed right here. We can see like Algeria with 30%, and the list goes on. Nonetheless, this could end up impacting prices of goods, so be ready. Maybe more deals will end up being announced or something of that nature, but I just wanted you guys to be aware of that. And then also looking at the economic lineup for this week, things are pretty much dead. We do have ISM Services PMI on Tuesday at 10 a.m., 30 minutes after the market opens. But besides that, the list is pretty quiet besides for like initial jobless claims on Thursday, which we will talk about as the week progresses. But it's now time for the fun stuff with some plays and setups for tomorrow. And with my first play, I'm actually looking at Tesla to the downside. Unfortunately, Tesla has been pretty brutal in the short term, and we've been following a massive wedge on Tesla for the past few weeks. Whenever I look at Tesla's current setup, it has been stuck in between this wedge. We can see multiple bounces pretty much on both ends of this. And most recently, now with this current touch and move on Friday, we actually fell underneath this wedge very slightly. Now, I'm not going to say it's a true breakdown quite yet, because Tesla's actually at a major psychological level at 300. If we see a solid move under $300 and I would say a hold underneath 300, then there could be good downside possibilities. On Friday, Tesla did get under 300. It touched around 298, jumped right back up as buyers pretty much came rushing right back in. If we could get a solid move under here, definitely watch Tesla to the downside. There was a massive buy wall on Friday here. There's 127,000 shares that were stacked up early on Friday morning, so be ready for that. And even before, like we can see right here on the Bookmap, there was a fill at 300 early on. There was around 499,000 volume at that fill. So just be aware, $300 is a huge level here. If Tesla starts to give it out, then go ahead and watch for another downside move. But shout out to Bookmap for the X-ray vision as always. Check out the links in the description down below for those. But Tesla's in a pretty rough setup. Even on like the daily, we can see it's just been downtrending here over the past few weeks. Now, it has ultimately been in kind of an uptrend from this low recently down in April around like 220 to 225. But then again, if it starts to break this slight uptrend here, then it's going to be game over. So definitely have your eyes on $300. I hope that doesn't make the Tesla traders too angry out there. With my next setup, I'm watching Intel for a possible support bounce. We can see Intel is actually nearing a very large support at $18.50 to $19. If we see this area continue to hold like it has been over the past couple years, there could be a great buy the dip opportunity going on. Every time Intel is touched here, it has jumped back up to like $23 plus, of sometimes even hitting like 26. So I'm going to really be watching this for a possible support bounce. Then again, Intel has been having some issues. They just recently had a pretty bad earnings report and fell from that. So if they do break under this large support at 18, I don't think I would just bag hold it forever. It does create a good risk reward though, because you can pretty much, set your stop loss like just under that $18 mark. And then again, like I said, target, $23, $26, somewhere like that to the upside. You can see that the risk reward ends up looking pretty solid there. But with those out of the way, it is time for today's momentum plays. And with the first one, I'm looking at NIO to the upside, which did pretty well on Friday. We can see the daily chart looks pretty bullish here. But essentially, if NIO can break out above $5.06, just above that $5 mark, then watch it up. It rejected there on Friday. With the next setup, I'm looking at MP also to the upside. If MP can break above 64.50, watch it up. There was a lot of touches there on Friday. And with the final setup, watch SMR to the downside. SMR, if they fall under 42, watch for a downside continuation. They were down 11% on Friday as they're starting to pull back in a pretty rough way here in the short term. But with those out of the way, it is time for today's $351,000 big money play. And with today's play, we're looking at ON. Yes, on holding. ON is a pretty crazy stock and a crazy setup. And essentially, the big money here is looking for a short-term move to the downside. We can see ON has been downtrending a lot recently, and over the past 2 trading days started to really fall off underneath a recent range that it was trying to hold. I think that the big money trader here is looking for a very quick move to the downside. Now, they didn't put a ton of money in this. It's the 46 strike puts that expire August 15th of 2025. There's only $351,000. It's definitely one of these smaller big money trades out there. But then again, it's such a short time frame, and I don't think that they're looking to risk much. So essentially, with it being the 46 strike, it's like right at the money. They could be shorting these, as any big money play could, but nonetheless, if we do see a $46 breakdown, then I do think that this play could pay out very well for the big money trader here. Now, one thing to be careful of course, ON has been in a pretty big downtrend for a while. There could be some support coming in here for a possible support bounce, but again, you don't really need like a crazy move that lasts for weeks or months. It just needs to be a good continuation off of last week. With it being such a short time frame, I just want to make sure that people understand that there could be added risk to this, so just take some caution, maybe enter in lighter than usual if that's the case, but there is some added risk given the ultra short time frame here. If we go to like an hourly chart and we zoom in, we can just see how accelerated that sell-off started to become there on Thursday and Friday. But we can't move forward without giving a shout out to our member of the day, which is Dip Commander. We can see right here in the Stocked Up Discord, craziest month ever for me. Thank you, Tom and Mike, for this epic Wall Street community. Let's go, Dip Commander. Awesome job. Up 5,000 this month. Love to see the awesome options plays for you. Doing very well. So glad to see you growing and continue to put in the work and make nice posts like this. It's always rewarding to see people have such nice growth. And the Profits channel was just full of amazing posts last week. Dip Commander made a couple, so I'm really glad to see that. But there were just tons of great setups and great plays, and nonetheless, great action as the market was pretty insane, right? If you guys had any nice plays, let me know in the comments down below. But if you're interested in joining the Stocked Up Discord, check out that comment section. We're going to have a pinned comment there. You can use code BIGMONEY to get in on the trading floor. We can see on Friday, a lot of the high-risk breakouts or the scalp plays that ended up doing pretty well. Coin popped up 140%, AbbVie 125%, and Circle 110%. There were a couple duds, but a lot of amazing plays mixed in there. So if you're interested, check out the link in the description and the comments down below. Use code BIGMONEY at checkout for $100 off the yearly. We run deals like this every so often, so be ready for that. Other than that, I hope you guys have a fantastic rest of your weekend, and let's have a great week here in the market.